IMF, meanwhile, cutting its outlook for global growth to the lowest since the financial crisis.
Welcome to this special coverage on BloombergQuint. We are in conversation with the management team of Vodafone Idea. Joining us is Balesh Sharma, CEO, Vodafone Idea, and Mr. Akshaya Moondra, who is the CFO at Vodafone Idea. Thank you so much, Balesh and Akshaya, for speaking to BloombergQuint. Let me begin by asking you regarding the strategy at Vodafone Idea. We have seen, overall competitiveness increase in the marketplace, pricing remain under pressure. So what exactly is Vodafone Idea doing in order to consolidate, their presence in the telecom market and become more profitable from the current levels?
So you're very right. The industry consolidation is kind of done, and that makes it a great opportunity for all of the players in the industry. We've come to a situation where there's 3 private players and 1 BSNL stroke MTNL. So optimum level of competition. For us at Vodafone Idea, we look at it with a great opportunity in the sense that the merger of the 2 companies, so number 2 and number 3 of the country are coming together. Right. We've got very strong set of assets from day zero. We have the largest pool of spectrum. We have 2 very well invested networks. We've got big fiber laid in the ground, as in 340,000 kilometers of fiber. So very good infrastructure. We've got 2 very strong brands loved by the customers that are coming together. We have the largest market share of customers. We have great revenue market share. What we are doing from here is we are saying we want to bring the 2 companies or 2 networks together as quickly as we can. What that helps us on? That gives us much quicker rollout of 4G coverage and gives us great capacity, therefore customer experience. So it gives us much better customer experience, therefore much better competitiveness in the marketplace on one side. On the other, it helps us take out costs. So therefore, both fronts, customer experience and profitability, they depend on integration. We are trying to do the integration as quickly as we can so that we get very rapidly forward on both of them.
Okay, but talking about the synergies between Vodafone and Idea, I'm sure you are still in the transitionary period. How well are the synergies, shaping up? How soon do you think everything will be, very smooth in terms of operations? Because I'm sure you're still going, with that merger activity, still consolidating your assets and, your customer base.
Yatin, a merger as complex and of the size and scale as this one will take time anywhere in the world. Typically, a merger like this would have taken 3.5 years. But we spent 17 months of planning before integrating the 2 companies. And in that, we've come up with a blueprint very clearly, such that we will be able to do this integration in about 18 months' time. Okay. We are now 6 months into it, and we are about 35-36% of our sites already integrated. We've already, in January, when we announced the quarterly results, we said, February beginning, we said that 8 out of the 22 circles radio network was already integrated. So we are very confidently moving ahead to be able to complete this whole task and by about March of 20. Okay.
Now, given the rights issue that is opening today, the 25,000 crore rights issue, can you give us some details on how much of this amount will you be using to repay debt, how much of this will be used for capital expenditure requirements and general corporate purpose?
You want to talk about that?
So it's like this. You see, first is that if you look at the rights issue, there's an offer document which says what are the purposes for which the funding can be utilized. First is 75% or roughly 18,750 crores is generally for repayment of debt or interest, and the balance 6,250 crores can be used for general corporate purposes. But if we look at the larger picture, we are saying that there is an overall funding requirement for the company, and this 25,000 enables the company to make investments, particularly in networks and in capacity and coverage, to be able to meet our strategic objectives and also to greatly improve the consumer experience. So from an offer document perspective, there's a certain statutory requirement that you specify, but I would say largely it is funding required to serve our overall strategy and the intent.
You also have planned to sell your stake in IndusTowers, and also you're looking to sell the fiber assets that the company has. Now we know how much the company will get from the sale of IndusTowers, but firstly, can you give us some details on how much you're looking to garner from the sale of the fiber assets? And if you see, even post these two sales, your gross debt would be close to 80-90,000 crore rupees. So is that figure sustainable, or should investors be worried about that amount, that debt amount that will be still there in the books of Vodafone Idea?
So let's say firstly, as far as the tower or the Indus stake monetization is concerned, it is a contractual arrangement. Hopefully, as Indus and Bharti Infratel is on track, and it should get completed over the next few months. And once that happens, we have the contractual right to receive that cash. At the current Bharti Infratel price, that value is more than 5,500 crores. As far as the fiber assets are concerned, we have given a disclosure that the total asset portfolio is 1,58,000 kilometers. This is a great asset and monetizable, as we have seen in case of towers, that when towers were a part of the mobility industry or telecom companies, the utilization of towers was not the best, as a result of which the value creation was limited. So, and I mean, these discussions on sharing of fiber and putting it into a common entity has been there for a long time. Probably the need of the industry to invest more in the networks is putting this need to the more forefront. So the plan is that we have taken steps to divest this fiber portfolio into a wholly owned subsidiary, which process has already been started. In parallel, once we are through with the equity issue, we also want to run a process engaging with prospective investors. We have already engaged bankers, and the information memorandum is more or less ready. So we'll start with that process of fiber monetization once this equity raise is complete. So that is as far as the monetization part is concerned. Your second question was relating to the leverage. Now, on the leverage, I would like to say that the absolute level of debt, whether it is currently 1,14,000 or both these monetization happens, the net debt comes to, let's say, about 84,000 crores. The level of debt in absolute terms is not high for the industry of this size. Why this appears high today is because the EBITDA is low. And that part can only be addressed by improvement in EBITDA, which we believe will happen, because everybody is kind of selling below cost today. Everybody is incurring a loss and cash loss. Forget a loss, it's a cash loss situation. However, going forward in terms of, or let's say at this point of time, our focus is that while the EBITDA will take some time to improve, the business should be adequately funded to execute its strategy. And that is why this capital of 25,000 crores rights issue comes in. So we are looking at 25,000 coming from this route, about 5,500 coming from Indus monetization. When we started post the merger, we started with a cash balance of 13,600 crores. So all in all, this accounts for 44,000 crores of cash available. In addition to this, we will have cash generation from operations. The first is the base EBITDA that we have today. We have plans to reduce cost because of the deduplication of cost coming out of the merger. That will help improve our EBITDA. And the investments that we are making in coverage and capacity, which enable us to take more subscribers on higher ARPU broadband plans, that will enable us to improve this. So that brings in a significant quantum of additional cash. And the last bit is the fiber monetization, which at some level is an option. We are working on it, but is it necessary today? I would say no. That is something we can do, and that's an upside for us.
So no valuation details that you could give on the fiber asset as of now?
As of now, no, but I mean, there is a general ballpark that if you were to look at the replacement cost of that fiber, and in the context of the industry, there is a wide range of intracity and intercity fibers. Intracity tends to be more expensive, but generally a thumb rule figure is about 1 million rupees per kilometer is the replacement cost.
Okay.
Of course, the value at which investors would be interested by is a different dynamic. May not be related to replacement cost, but that's the best benchmark available today.
Okay. Also, if you see, there's a lot of talk in the investor and the analyst community that this fund infusion of 25,000 crore that the company is doing via rights issue won't be sufficient for the company, and it would need another fund infusion going forward for its capital expenditure plans and to contain its leverage ratio. So do you think that the company will actually require another fund infusion after this rights issue?
Absolutely not. So we're very confident that the rights issue plus the Indus monetization and the cash generation from operations is sufficient for us for a long haul. Add to that the possibilities of fiber monetization and incremental revenue uptake through getting more coverage and capacity and taking more customers to unlimited that Akshaya was talking about. All this put together gives us a sufficient cash that we need for being able to fructify our strategy that we've talked about.
And Balesh, Akshaya pointed out that probably from here on we could see some improvement in pricing. You are, probably making customers consume more data. So, once that happens, do you think, the industry is at an inflection point? Competition also realize that they are burning cash, and probably from here on pricing needs to improve and not deteriorate further. So on pricing front particularly, how is Vodafone Idea strategizing, and how really do you see the coming quarters in terms of pricing for the industry per se?
So very right that it's become a three-player market practically, plus BSNL, and all are burning cash. All are losing cash at every passing day, every passing month, and that's happening because we are selling below cost, all of us, and therefore this is not sustainable and will need to move from here upwards. When does it happen, at what gradient it happens, is very difficult to predict. That's why very clearly we are focusing our strategy on customer experience delivered through quick integration and getting the experience up. On pricing part, it has to change, it will change, but we're not kind of waiting for that. We're moving on with what is right for us to do in the interim.
Okay.
And if I can just make one point, I think the government is focused on Digital India.
Right.
Digital India will require a lot more investment. Where will that investment come from unless the industry players, currently they are all burning cash. You need to make up that cash burn and then actually generate cash for future investment. So it is very important that the health of the industry improves so that the industry can make investments into the future.
Okay. One question really on the promoters, the pedigree and, two powerhouses coming together to form this company, Vodafone PLC and the Birla Group. When we were there during the merger announcement, there was a clause which spoke about equalization for both the promoters in terms of shareholding. Of course, there is a rights issue here. The matrix has changed. There was an option of 130 rupees for Mr. Birla to buy out the stake at that particular valuation. Now the rights issue itself is priced 1/10 broadly. In terms of commitment from these promoters and also the commitment regarding equalization, would it be safe to assume that the Birla Group participation from the promoter group could be higher than Vodafone PLC, so that during the rights issue only itself there could be equalization which can possibly happen? Or Vodafone and Idea or the Birla Group is in a situation wherein they would like to stay as it is and subscribe the rights issue on a pro rata basis?
So look, couple of things here. This is the largest rights issue the country has seen.
Right.
In the largest rights issue, this is the largest promoter contribution that you've seen. Clear statement of promoters backing us, clear statement of promoters believing in the market, in the industry, in the telecom industry itself, but also in the prospects of Vodafone Idea and the team that is behind the Vodafone Idea thing. They have said that they will go up to 73% of the rights issue, whereas the shareholding is slightly less than that, about 71%. There's a marginal correction that happens if it goes exactly as was stated at the time of announcement of the rights issue. If the proportions remain exactly the same, there's a marginal change in the proportion of Vodafone and Idea from where it is today. However, as far as the JV is concerned, it is run as the JV of equal partners, and that does not change. So as far as customers' life is concerned or management team is concerned, it is running as a JV of two equal partners. There are arrangements that have been discussed. You stated most of it already, but it is a long-term arrangement where equalization should happen. Various routes have been defined, and they'll come to that as time passes.
So in short, the participation and rights issue is more or less in accordance with shareholding, with minor variation here and there, nothing significant.
So as you were just mentioning that your debt is not high but your EBITDA is low. So on the EBITDA front, if you see now for financial year 2019, analysts are expecting your EBITDA to be close to around 3,700 crore rupees. Now on this number, how much improvement you're expecting in financial year 2020? Because if I remember your merger synergies, that is close to 8,400 crore rupees on the EBITDA front. It is expected to come in FY21, right? So for FY20, what is the kind of improvement that you're expecting here on the 3,700 crore now?
So there are a couple of things we've said. We've said that at the time of announcement of merger, we said it's going to take us 4 years. Now we are saying in 2 years we'll complete the merger, such that the full effect of synergies, 8,400 crores per year of cost reduction, would, instead of FY23, happen in FY21, and we are well on track of that. That will obviously help the EBITDA on one side. On the revenue side, there is a price hike that people talk about, and we expect the industry to get. But even other than that, there is scope for being able to take customers at existing prices from non-usage of data to go to usage of data. And there's a clear opportunity there. There's also opportunity for us to build revenues up through plays in adjacent industries other than telecom through partnerships. We very clearly stated that Vodafone Idea, we will focus on our core, which is our customer base, managing our customer base, managing our digital and physical distribution, managing our enterprise relationship. That is what we are good at. That is what we will keep investing our time and resources in. Everything else we will bring through partnerships. But through those partnerships, in areas of content with video, music, areas of fintech, areas of retail, areas of assisted retail, there's a lot of play for us that we can again monetize through. So all these should help improving revenue. Synergy should help on improving cost side, and therefore EBITDA should see an improvement.
So any kind of number that you could give us, the improvement that you're expecting in
probably,
FY20?
is it a bottom formation for a company like Vodafone Idea in terms of the profitability? 3,700 crores. Does it mean this is probably
at this juncture we cannot be giving you a guidance per se. We're talking to you directional, we're talking to you strategy, and we're talking to you how that strategy gets supported through the funding that we're talking about.
But in the last quarter we've already seen an improvement in EBITDA because of the synergies being realized. Part of the synergies being realized.
So we can take that number and annualize it and expect that kind of EBITDA?
So I think, as we said, the synergies will take some time to realize. Part of the synergies have been realized in the preceding quarter. All that I'm saying is that there has been a turnaround in EBITDA already. It is not that the complete synergies are realized. It will take some time to get realized. And our guidance was that in FY21 we expect to be fully operating at the synergized cost structure, if I may say so.
Now if you see, when the merger was announced back in 2017, now it looked quite attractive based on the merger synergies that you had given 8,400 crore. But now 2 years down the line, if you see, the fall in EBITDA for both the companies have been so steep that it appears that all that synergies has been now wiped out completely. So do you think that the merged entity now can reach that kind of EBITDA level in future, or how much time do you think the company will require, the merged entity will require?
Because what is happening in the process that of course pricing might improve is what consensus now believes could be possible for the telecom sector. But as you were also mentioning, and what I understand from what Soumit has been collating so far, is that leverage is reducing. You are monetizing your assets well in time. There is support from rights issue. So from here on the profitability front, be it operating profits or be it the bottom line, do you see substantial improvement in FY20 itself, or FY21 will be the inflection point for you?
So directionally, exactly what I already said. Very clearly focused on walking the bridge from both sides. One is the revenue side of it, the other is the cost side of it. You said synergies have been wiped out, not at all. The full effect of synergies is still to come, but we are well on track on delivering that. We don't now see that 8,400 crores is necessarily the end of road. We are now looking at how do we, this 8,400 crores of cost takeout that we are talking about comes only by deduplicating of the cost. We are next looking at how can we transform ourselves and come to even lower cost structure on the cost side. Whereas on the revenue side, we are looking at all opportunities to be able to give great customer experience and grow our data market share, therefore revenue market share, to come closer to where our customer market share is.
Okay. Also, according to the TRI data, if you see, in the last 9 months to January 2019, your active customer base, now that has come down by nearly 3.5 crore. Now, firstly, this could not be entirely because of the minimum ARPU initiative that the company has taken, because that was started in November, I guess. So, what led to this big fall in active customer base for the combined entity, firstly? And secondly, when do you see the subscriber base stabilizing for Vodafone Idea?
So majority of the numbers that we lost in last quarter, and we stated that in our quarterly results, was because of the minimum recharge that we put. Okay. This was actually, therefore, the customers carrying multiple SIM cards who would have dropped one of the two SIM cards and melted the usage into the other SIM card, and as expected. However, with this discipline being put in the market, the industry revenue and for sure Vodafone Idea revenues in the long term should see stabilization from this particular segment of low-end users or incoming users only.
So this minimum ARPU impact, you're expecting a customer fall in the fourth quarter also, and when do you expect that to stabilize actually? That's what I wanted to know.
I cannot again be giving guidance on that, but you are right in saying it had only started in the last quarter, and therefore reasonable to expect the impact to continue till every customer is already onto that recharge.
Okay, and any expected timeline that you're seeing that after first quarter of FY20 that won't happen more?
Look, we've already put this initiative across the country by about end of November. However, not all customers can be brought onto it, so that has to be spread for about 6 months, and then over that period is when your full impact comes in.
Okay. Now, the Jio phone that was launched by Reliance Jio, now that has seen a lot of traction in the rural market, which is one of the mainstay for the merged entity, because I guess 52% of your subscribers are from the rural market. So, what is your strategy here? Are you planning to tie up with some phone company to bring out a low-cost phone? And so, how do you plan to counter Jio phone on the rural markets?
So our strategy, first of all, is to get our coverage of 4G to be there, then get capacity to be there, which happens through the integration I talked about. So very rapidly, we've been growing our coverage and capacity, and that continues to get the full effect of synergy. Then when you have coverage and capacity, in areas where you have coverage and capacity, how do we compete on the low-end or entry-level phones? We have tie-ups we've had in the past and will continue to have tie-ups with the entry-level phones to make attractive bundles for customers to come in. We've got very attractive tariff plans for the customers to come in and stay on with us. And then we work towards entry-level smartphones and tying up with the smartphone vendors to make attractive packages so as for the customers to get real smartphone feel and have full access to entertainment bouquets that are offered by us through Vodafone Play and through Idea TV products of ours.
Okay. Now, if you see your 4G subscriber growth, now that number has been lacking the peers like Airtel and Jio. So, how do you plan to ramp up your 4G subscribers, because they are mainly the high ARPU customers, and you want them to come on your network because that will generate more revenues for the company. So, how do you plan to ramp up more 4G?
Our 4G customer growth has been in line with that of Airtel until the last quarter's results that were published. Okay. We had by that time 75 million customers on 4G. This is despite the fact that until then, our coverage of 4G was a much smaller footprint, and that's growing very rapidly. So is our capacity. Therefore, from here, we only are confident that it's going to go up.
And bulk part of your, rights issue capex, money, does it largely go into 4G and tower fibrification, or how really does that piece move? Because you said that you are trying to increase your 4G coverage. So will that general corporate purpose and capex purpose money that you are raising in the rights issue move in the direction of 4G and empowering those rural towers so that you can have better coverage?
So if we de-link it from the rights issue, we are saying, so we've given a capex guidance of 27,000 crores over FY19 and 20. That is only new equipment to be purchased, and we are not purchasing any new 2G or 3G equipment. All new equipment purchases are 4G. But in addition to that, fiber is to be laid out, which is largely for broadband but not technology specific. We are investing in Crore, which tends to be technology agnostic. So it's a whole bouquet of investment being made. But more importantly, 27,000 crores represents only the new equipment to be purchased. As we have merged, on the date of merger, we had about 200,000 towers, where out of which 70,000 towers were where Vodafone and Idea were present together on the date of merger. All these towers have overlapping equipments, which now will be redeployed to the remaining 130,000 towers. Okay. So these will create fresh capacity without capex being incurred, and the value of this is about 6,200 crores. Okay. On top of that, there is one more source of capacity creation, that the remaining 130,000 towers on the date of merger were using only Vodafone spectrum or only Idea spectrum. Now, as we integrate the two networks, each of these 130,000 towers will be able to use both Vodafone plus Idea spectrum. Okay. That will also give a significant impetus to capacity. So really speaking, the benefits of merger, while we've talked about OPEX synergies, this is the big benefit coming in terms of capacity creation. And so while we were a little constrained till the time merger was completed to take over this exercise, now with this exercise underway, the capacity creation will be very good.
Okay. Now, in the last time when we met, and Airtel has also repeatedly said that both of these companies are not interested for an auction given the financial health of the sector that we have seen. But from the government side and from Reliance Jio, they are willing to do an auction to get the 5G spectrum. So, what is your say here? And if at all government goes ahead with an auction, will Vodafone Idea look to participate if government does an auction for 5G spectrum?
So very clearly 5G is needed. Very clearly 5G, India should have a rollout of 5G happening at the right time. Right now, 5G ecosystem still is just evolving. The use cases India specific still have to be developed. We have sufficient spectrum available with Vodafone Idea to be able to create a lot more capacity than we have today. All the benefits of 5G that can today be utilized are already being brought forward to us. We are the last ones to deploy technology on 4G, and the later you buy, better you buy. So we're buying things like massive MIMO, TDD, and building lots of capacities to create the best possible customer experience already. As and when 5G ecosystem develops and the use cases come in, we will sure be able to play. Being a part of Vodafone Group, we have access to cutting edge technology and research of all kinds, and therefore are going to be all set to be able to take part and play a role in the 5G at the right time.
But also, if I may add, you see, why do you need spectrum? You need spectrum, either there's a specific application with that technology, which, as Balesh said, is not there. Secondly, you need it for capacity. Now, really speaking, our traffic on broadband today was about 30 petabytes per day. There is a lot more capacity that we can create on the existing spectrum. And when we are giving you our capex guidance of March 20 or FY19 and 20, we would probably have utilized only half of the capacity potential of the spectrum. So really speaking, from a need perspective today, there is no need to buy more spectrum. As and when we need it, we'll definitely participate.
But what if the government goes ahead with an auction? Will you participate
So
then?
you see the need, you have to see this differently from the previous auctions. What always happened in the past were there were 10 operators.
Yes.
So if you did not participate and take spectrum in this auction, the next time you may not get it.
Yes.
We've had the last auction where the entire block of 700 megahertz is still unsold. And now the government is planning to sell 5G spectrum. The point is that today's spectrum adequately is available, the number of operators has reduced. So you can buy spectrum when you need it. You don't have to hoard it, if I may say. Okay. You just buy it when you need it.
Okay, so thank you so much, Balesh and Akshay, for the insight that you gave, and we wish you all the best with this 25,000 crore mega rights issue.
Thank you.
Thank you so much.